most multinationals which are operating in the developed world are seeing kind of a real slowdown and end of their life cycles in their own countries in terms of unit volume growth and so on. And therefore, they're harvesting a lot of the investments they've made in countries like India, where the growth prospects and therefore the terminal values are that much higher. And just by way of illustration, I was listening to your correspondent earlier on the Hyundai IPO. And again, as an example, Suzuki Motor, which is also listed in Japan, and Maruti, which is its subsidiary in India. So the Maruti holding of Suzuki is about 60%. And the entire Suzuki Motor market cap is less than the value of its holding in its Indian entity. So it's showing you the sort of the valuation exuberance that the Indian market is demonstrating. Similarly, Tata Motor trades at aggregate market cap, which is probably equivalent to that of Honda or Volkswagen or Ford or BMW in that sort of ballpark. Although, as you know, the bulk of its earnings are driven by JLR, which is a much smaller company. So it's clearly a market where multinationals across the world, from GE of US has sold down its stake, BAT of UK has sold down a stake, Sumitomo from Japan has sold down a stake. Indeed, from Singapore, Singtel itself sold down a bit of its stake in Bharti Airtel. So this trend is prevalent, and I only expect it to accelerate.
I understand that. I understand that a lot of these MNCs are taking a big bet on India. But I guess the question was more about, can they generate the kind of compounding returns that Indian domiciled companies have over the last many decades, whether it's in banks, whether it's in IT outsourcing, whether it's in the consumer staples space. Do you think that that's the potential these companies have?
Well, I mean, again, to use the same example, Hyundai has been around in India for 25 years, and they have compounded and they've done very well for themselves. And again, I'm not trying to recommend the stock or anything. But the fact is, India has been a welcoming environment for global companies. And even today, if you would look at, say, the largest e-commerce companies in India, it would be Amazon and the local affiliate of Walmart, which is called Flipkart in India. And across categories, so Accenture from the IT services space is there. There's so many global capability centers. There's so many pharma outsourcing centers, and they're all doing remarkably well and have become remarkably large companies, which are, of course, in the unlisted space. But it's just that India is providing such a plethora of opportunities for growth that if the real economy is growing at 7% and you just flashed inflation at 5%, the normal company is growing at 12%. And if you're competing with an unorganized sector or you're going into a white space, the earning growth is that much faster. And so the opportunity canvas certainly for India is a lot larger. And I think it's understood well in the world that this is like a $4 trillion economy. It's not going to stop here. And over the course of the next decade, it will probably reach closer to $10 trillion than where it is today. That incremental $6 trillion then creates large opportunities for growth.